Good morning and welcome back to the ETF Inspector. It's Sunday, August 24th, and you're seeing that right. It's before 6:30 in the morning. It's soccer tournament weekend for my youngest daughter, so we're not going to be home all day trying to get this out before we hit the road for the morning. Sorry, I probably still have a little bit of morning voice, a little bit tired, but we're going to get through this quick. This is our YieldMax video for ULTI, the Ultra Option Income Strategy Fund, and SLTY, the Ultra Short Option Income Strategy Fund. This is our week look ahead and payment distribution guesstimates. This is our deeper dive. If you haven't noticed, I separated out LFGY. It's got its own video, and its week look ahead and distribution guesstimate already came out last night. So if you are into that, you can go check that out. All right, this is the one everybody's usually waiting for. So reminder, I'm on X and at ETF_Inspector1. Also, the show that I did the previous Saturday with Ambassador of Quan, Parabolic Nurse, Max Convexity, and Retire on Dividends, all about ULTI. They did another one this past Saturday, yesterday, episode 2. They've got the on X if you want to go back and listen to it. And then also ETF Delta, who was on the show this time in place of me, did a write-up as well because he said there might have been some sound issues trying to listen to it. And he made some good points that I will try to reference if I can find his write-up quickly, but I don't know if I can. So I will try, but we won't spend a ton of time. I'm going to try and go a little faster than I usually do on these videos. All right, so we know ULTI has been dropping for a little while now, right? It's been a rough month. We're hoping we kind of found that bottom this week and bounced back off of it on Friday, ending up down 2.6% for the week. So not the greatest, but that also includes a 10-cent distribution in there. So realistically, we'd be $5.84 if they hadn't paid that out. Everything except for Reddit in ULTI enjoyed Friday. But let's go ahead and get right into it. So ULTI over the past week had approximately 440 trades. So we copied and pasted every one of them. That gives you basically the date, position, action, contracts, and price. So I bring it in. There's two different formulas, one for if it's shares like these and a different one for if it's options, in order to come up with the total, because shares, the quantity's correct. Options, that's an amount of contracts, and it still needs to be multiplied by 100. So that's why that formula's got a 100 in it. I've had some questions about what these actions are, right? I'm not writing these in. These are what comes on the CSV from them. Sell is obvious. A buy is obvious. And then we got SS. People say, what's that? That's a sell short. So you see a lot of SS in SLTY because they sell short the shares. In ULTI, the only thing they're going to sell short is an option contract. Most of the time a call, every once in a while a put. And then buying to close is just that. BC is buying to close. So if you've sold something that you didn't have in the first place, it's going to be an SS, sold short. Whereas if you're selling something you already have, it's just a sell. If you're just buying something in general, then it's just a B for buy. If you had sold something you didn't have in the first place and now you have negative shares or negative contracts, then when you buy it, it's not just a B, it's a BC, buy to close. So that's going to be an option contract only. Well, no, it'll be when SLTY closes out their short shares as well. All right, but 440 trades throughout the week, approximately. I'm rounding to the next normal number. So when we go up, if you watched or listened to the podcast or whatever you want to call it, Spaces, last week that I spoke on, they asked me for my take on the week going forward, and I said they're set up to make the income in trading this coming week. We hadn't seen it in a long time. But I thought we had a good chance, and it turned out to be right. But August 18th, that's Monday, they made $9 million trading. On August 19th, they made $30 million trading. The 20th, Wednesday, they made $74 million trading. Thursday, the 21st, $13 million trading. And then obviously on Friday, if all the stocks go through the roof, it's great for your values. It's great for your underlyings. But if you've got options sold, if you've got covered calls sold, and the stock market goes through the roof, you're going to be paying a lot to close things out. So they gave back $15 million on Friday, but it still resulted in $111 million in that's realized gain, and that's just on options. That doesn't include buying or selling of underlying shares. That's just options. They made $111 million. So that's what helps us get to our first estimate, the income estimate. That's basically what's supposed to be used. We only fall back on other things when we need to. I hope you're sitting down. That comes out to a 20-cent dividend. Now, do I think they're going to pay a 20-cent dividend? Well, you got to wait a little longer to see what I said. But that's crazy. All right. In that same time period, the share values increased on Monday by 2.3 million, decreased on Tuesday. That was a bad day, 185 million. Wednesday by 12 million. Thursday, they dropped by 9.5 million. And then Friday, we made back most of it, increase of 142 million. So, Tuesday's bad day was a little worse than Friday's good day, but two extreme swings ended up our share value, our market value dropped 62 million over the course of the week. To get to our IV estimate, we've got to take a detour and talk about the IV. All right, so I use Market Chameleon. So for example, here's Bitmine Immersion, 30-day IV, 129.4. All right, I am still using 30-day IV. I still haven't been able to find a reliable source for a 7-day IV. And I'm still just looking up the underlying itself and giving it weight that way, as opposed to looking up every single option contract, which is what they actually do. So that's why, even though I go through great lengths to get a nice weighted average of IV, it's still not going to be the realistic, the exact IV, because the options are going to actually have a higher IV. And that's why I generally am coming up with these 70-something% weighted average IVs, and then ULTIs paying 80-something to 90%, because the options playing into it are going to be higher IV. Now, could I do it? Yes, it takes a ton of time, and this already takes a ton of time, so I don't have another ton of time to do. Maybe if I were retired or something, I could. But even if I did, it would become difficult to weight it. It's pretty easy to weight the shares, because I can just take the value of a firm shares, divide it by the value of all the shares, and that's the weighting. Now you would say, okay, we'll just take the value of the options as well, but we've got negative values and positive values. Our weightings are going to get all crazy. But back to what we're doing. So if I scroll down real quick, our average stock within the fund is going to have about 4.35% of the money in it. Now, there are a couple outliers. A lot of times they've trimmed their positions on certain ones, or sometimes if they bring one in just for a quick play, like Marvell Technology, they're not going to give it the same type of weight as most of the others. So those end up a little lower, where your long-term ones end up higher. We trimmed our Galaxy Digital in the past week or so as well, down under 1%. We weren't really getting swings that wide before, but that's one of the points I wanted to point out that ETF Delta made in his talk. No, sorry, not trying to waste too much time. I can't remember. Oh man. All right, so I'm not very good at X. On one of these, he posted a write-up. All right, so I'm done trying. He posted a write-up of the video, and one of his points was that they have, over the past week or two, trimmed their crypto exposure, and it was approximately 30% before, and it's down to like 20%. So that's why you saw Galaxy Digital out of here. You saw Mara out of here. MicroStrategy's gone. Galaxy's been trimmed. So they've dropped how exposed they are to crypto in this fund. But anyway, you guys want to hear about the IV estimate. So Affirm Holdings is about 5.5% of the weight of the fund, and it was an increase this past week to 81.4%. AppLovin, or McLovin, is 5.42%, and it's an increase to 57.5%. Now, real quick, if you don't know what I'm talking about, implied volatility is just kind of, and this is not any kind of technical term, this is just in layman's term, it's like what the chances are, how wildly this stock has been moving or can move. So your big time blue chips, they're very low implied volatility. They don't just surprise you one day and jump 20%. But as you've seen, lots of things in here do, and that's why they pick them, because there's more premium associated with options when they have high IV. AST Space Mobile, almost 5.8%. That was a decrease to 76.4% IV. Bitmine Immersion, a little over 3.5%. They're down, but they're still our biggest one of all, 129.4% IV. Webull, 3.11%, down to 90.4%. Still another big one to help the number. Coinbase, just over 5%. That's a decrease to 54.1% IV. Credo Technology, I believe this one's just going to be an earnings play or a short time play. They got less in them. They're not as common of a name in here. 3.69%. That's an increase to 95% IV. That helps. CoreWeave, 3.3% of the holdings is a drop to 72.9% of the IV. We talked about Galaxy Digital has been trimmed down to 1.27%, and they decreased in IV to 79.1%. Robinhood's 5.35% of the holdings increased to 63.3% IV. IonQ, 5.61% of the holdings at the decrease to 69.2%. And that's surprising, because if you look at, I only know this one extra because this is my favorite one to trade on my own. I mean, in a week, you can run from 40 all the way down to 34, all the way back up to almost 40. That seems like some crazy IV to me. But Marvell Technology, we just added this one in. Their earnings is coming up on Thursday, I believe. 2.66% of the holdings. I've got it as an increase, but it's only an increase from the day that I added it to the fund like a day or two ago. 65.7% IV. Nebius Group, 5.28%, holding 72.5% is a decrease in the IV. Another decrease from Oklos, 80.7% IV on 5.62% of the money. Palantir, 3.83% of the money is in there. 50.7% is an increase on the IV. Reddit down to 61.9% IV with 4.38% of the money. Rigetti, 4.91%, another decrease to 73.1% IV. IV dropped on Rocket Lab to 72.6%. They are just about 5.5% of the holdings. SMCI has been trimmed, not that recently, but 2.64% of the money. It's a decrease to 55.2% on the IV. Again, another decrease. NewScale Power, 79.2 with 4.35% of the money in there. Tesla, we always kind of keep them small, 3.27% of the money. It did go up this past week on the IV to 45.6. Unity Software, just over 4.5% of the money. It's an increase to 67.5. And when I say an increase, I update these once a week. So this is from an increase over the past week. And then finally, Upstart, 5.45% of the money is in there, and it's an increase to 64.1% on the IV. So overall, 14 of the 23 underlyings went down in IV, and 9 went up. Our price of the shares for the fund dropped to, or ended at 5.74. That's went up on Friday. Our overall weighted average of our underlying IV is 71.58. That is an increase from last week. We were in the 60s based off those numbers last week. So the way we get our IV estimate is we multiply this by this, the share price by the IV, and then divide it by 52 because it pays out 52 weekly payments. So if we did that, we come back now, we're making estimates. It would only be 7.9 cents. Now, don't forget, like I said, this is just a close guess, but all the options are going to have higher IV than the underlyings, especially around earnings times. So that is not the true IV. That's just the best I could come up with to get us close. We know it's higher than that. Okay, so we take that into account. We're looking at roughly 8 cents based off the IV, maybe a little more, but they made 20 cents. What do we think they're going to pay? I'm saying 10.5 cents. Now, the reason I am is because we've been dropping a lot, right? We talked about it over the past. Oh, I'm not on the right thing. Over the past month, we've dropped from 630 all the way down to 570s. I don't think they're going to want to pay, and they've been paying 10 cents every week, even though we've been dropping 10 cents every week. So they've been paying 10 cents when they didn't make it. Now they finally did. They made 20. I don't think they're going to pay 20 because they've already overpaid us before, making some of that money back. Also, I don't think they want to knock 20 cents off of a $5.70 fund. I could be wrong. They might want to shock the world, but if they pay 10.5 cents, that's a 95% annual yield. I don't think they're going to pay. Maybe they'll go over 100 just because it looks so good, but that's my estimate. Okay. All right, now we got to pick up the speed a little bit. I need to leave at 7:15. Still need to get ready and need to upload this video. So again, apologize if I'm moving too fast. But generally, I would say people probably watch my videos on fast forward anyway. So, okay, Affirm Holdings got calls sold at 83 and 86 this week. They're 4.4 and 8.1% out of the money. I'm probably going to drop that decimal point just to make this even faster. AppLovin's got calls at 420, 445, and 455. The first ones are already in the money, almost 5%. The next two are 0.75 and 3% out of the money. We're going to see a lot of this because a lot of things got rolled prior to Friday this week, and so then they'd already picked a lower strike for the following week. Then Friday happens and the stocks all run like crazy, and so we're going to have a lot of calls that have already been blown through for next week, but that's okay. We got time. AST Space Mobile's got calls sold at 46.50 and 50 with stock at 47. First ones are 1.2% in the money, and they're the ones that matter. 35,000 of the 37,000 contracts, 1.2% in the money. The others are 6% out of the money. Again, same thing. Bitmine Immersion ran up big, 53.50 almost. They got 51.50 sold, a little more than half, 3.7% in the money. The others are at 61. They're 14% out of the money. These prices are call strike prices. So they're selling a contract saying we are willing to sell our shares at this price if it hits there by the expiration or sooner if the buyer of the contract chooses to exercise. The nice thing with these guys is they've got stipulations set in where options don't get exercised. So they cash settle, they keep everything, they roll everything on their own. There is no assignment. Those are 14% out of the money on those 61s. Webull, another one, 15 sold are already in the money by 2.6%. They got 15.50s and 16s, 0.5% and 3.8% out of the money. Coinbase, 319, almost 320. They got 327 sold. That's the only strike price. 47.75 contracts, 2.39% out of the money. I do want to point out there's been a lot of confusion. I've said it a lot of times, but I think other people making videos don't look as deep, so they just kind of say quickly, oh, most of the shares have puts. No, every share in ULTI has a put to go along with it. All right, so there is protection, not on a percentage, not on half. Every share's got a put. Not all of it is full protected, and I'll explain that to you when we get to some of those, but they are the outliers. Okay, Credo Technology. They've got calls sold at 118 and 120. They're 3.5% and 5.2% out of the money. CoreWeave, 93s and 98s. The 93s are 1% in the money. 98s are 4% out of the money. If your option, you sell it up front, you collected all the money. If it ends out of the money, you got to keep the money. If it ends in the money, you've got to spend the money to close it back out. Okay, in our base, we'll just call it just like cash, $202 million sitting there in our First American government obligation funds, ready to either pay out or put to work to buy more shares. Galaxy Digital, they've got 2550 sold. They're 2.2% in the money. Now here's one, right? So you can see, man, making me look dumb here. So there's only 48,000 contracts of puts purchased. So that would be, that doesn't even make sense. So that'd be like 4.8 million shares worth. Yeah, we would only need 15,000 puts to protect these. So we're going to end up, I don't know what the deal is with that, but we've also sold some puts to help pay for the protective puts. And that's not making sense either. No, it is. Okay, so we've sold some puts. So this one's a little different. This one's a very odd strategy compared to the rest, even some of the others where they're just making money. So they've sold puts at 25, purchase puts at 21. So we'll say this one's, I don't know that we're going to call this one the collar strategy. Those sold puts, as long as this price stays above 25, you'll keep that money for free. That was 2.2% out of the money. So Robinhood Markets, 109. They've got 111s, 112s, and 115s. 1.5, 2.5, and 5.2% out of the money. IonQ, 38s, 3850s, and 41s calls sold this coming week. 4.5%, 3+% in the money, and then 4.3% out of the money. Marvell Technology, this is the earnings play. $73, closing price $78 strike, 6.8% out of the money. Nebius Group has sold 69s and 71s. They are 0.03 and almost 3% out of the money. 2 cents out of the money on those 69s. Oklo sold 68s, 71s, 73s, and 74s. We'll talk about this other one in a minute. 3% in the money, and then just about 1%, close to 4%, and 5% out of the money on those options. Then they've gone ahead and purchased the puts to go along with them. As you see, these 58s go with these 68s, these 60s go with these 70s, and so on. So they've got all the protection to go along with them, but then to bring in a little bit of money to help pay for that protection, they sold some $57 puts. That's below all these other ones. And they're 19% out of the money. So what they're doing, they kind of line up with these 61s. So if the stock drops below 61, we'll say if it dropped below 57, at that point, these 8,430 contracts no longer have complete 100% downside protection. They kind of get capped, and worst they can lose is $4 a share. All the rest of the contracts have 100% downside protection, but there are 100% puts for the shares that they own. Galaxy Digital is the only real weird one where the numbers don't add up and they actually end up having more puts than needed. Palantir Technology. Actually, here, let me scroll back up so I don't confuse people. They only need 15,000 protective puts for those. So what they have, now I've got it. Sorry about the confusion. There's 15,000 puts here to go with these 15,000 calls. Everything's protected. But then they have a put spread here where they sold 33,763 puts at 25, and they purchased 33,763 puts to go along with that. So that's just a put spread. So if you didn't have this bottom line, it's 15,000 and 15,000, 100% are protected. Then they just did an extra put spread. Hopefully you're with me. Okay, Palantir Technology, 157.50, 160, 162, and 165 calls all sold. 0.7% in the money, 0.7% out of the money, 2 and just about 4% out of the money, all expiring this Friday. Reddit, 225s and 230s are sold, most at 230, 3.5 and 5.8% out of the money. Rigetti Computing, 1550s and 16s, 4.5 and almost 8% out of the money on those calls. Rocket Lab's not looking good. Sold calls at 41.50, 42.50, 44 and 47, 6.5% in the money, 4.25%, almost 1% in the money before they get the first one that's out of the money, almost 6%. Then same thing. Purchased all the puts to go along with all the calls, but then sold some puts below all the rest of them just to bring in a little income to help pay for all that protection, 21% out of the money. SMCI, single strike price chosen, 44.50. They're 1.4% out of the money. New Scale Power, sold calls at 35.50 and 37. Again, sold puts at 29 to help pay for the others. 1.3 and 5.5% out of the money on the sold calls, 17% out of the money, right? They're going to sell that put below all the other puts. So it shouldn't get hit. And if it does, all these other ones go up in value a lot. These are just helping to pay for the protection. Tesla's got 332.50 sold. They're already 2.2% in the money before we start talking for the week. Unity Software sold 37.50s and 38s and 41.50s. They're 4.25, almost 3% in the money and almost 6% out of the money. And finally, Upstart Holding sold 72s for this coming week. They're 4.5% out of the money. All right, on Friday, believe it or not, we still had people selling out of the fund. So you maybe had people panicking that it went low, happy to see that it got a little bit back and just took off. So outstanding shares dropped by 1 million on Friday. It's now at 543,675,000. That makes the net assets or assets under management 3.1 billion, and the NAV and closing price were dead on with each other at 574. Most recent distribution we got paid on Friday was 10 cents. And that's everything for ULTI. So quick recap, they made over 20 cents a share trading options this week. Gotta love it. Estimates probably, that's, like we said, that's flawed. We're still going to say it's in the 8s. My guess is 10.5%, or 10.5 cents. Maybe they'll crank it up just enough to call it a 100%er, but it is what it is. That'll be my guess. Next, I'm going to real quick look at SLTY. So I want to show you, I had to make my own holdings page because if you go to SLTY's page and scroll down, here's your holdings, but that's not all of them. So you click the download, and the download is still nothing. All right, so I had to make my own. With that being said, I did not take all of Friday's trades and continue making my own. So this is all current after Thursday, and then I said, you know what, like I'm good. took a ton of time, but they're not paying out this coming week anyway. They said September 3rd is going to be their first time. I don't know if the 3rd's a Wednesday that they're going to declare, or the 3rd's a Friday that they're going to pay. I think it's a Wednesday. My anniversary is the next day, so I should know. Okay, so we're just going to very quickly look at what's in here. If you haven't been following along, they've shorted Astera Labs, Abercrombie and Fitch. Now, when I say shorted, instead of owning shares of these, they have negative shares. They started out by selling shares they didn't have. There's kind of like borrowing that comes into play. So they're shorted this. They've sold these shares, and the plan is that they'll go down. So when you buy them back, you pay less than you received when you shorted them. In the meantime, they're doing a reverse collar strategy where instead of selling calls to generate income. They're selling puts to generate income. And instead of buying puts to protect their shares, they are buying calls to protect their negative shares. Because if they go up, it's a problem. So you want to own a call that will go up. In that case, that's your protection. That's your insurance policy. All right, so they've shorted Astera Labs, Abercrombie & Fitch, Applied Digital, Bloom Energy Corp, Bill Holdings, never heard of that one, CrowdStrike Holdings, Dell Technologies, they added that one on Thursday. They didn't do that on the first day. Enphase Energy. They've got I'm just keeping this as a line item. I don't know if they do or not. GitLab, another one I don't really know. Lululemon. They did start with Intuit, but they had already closed out of them within the 2 days of trading, and they did make some money. Lululemon, they've shorted. Mara Holdings, they've shorted, which makes sense. If they're shorting it, they think it's going to go down. It makes sense that they took it out of ULTI on the one where they think it's going to go up. MongoDB, they shorted. Strategy or MicroStrategy, again, they took it out of ULTI. Stopped thinking it was going up. I don't know that they think that long term, but this is just short term playing. Shorted them and shorted RH. They do have about 11.8 million. I am able to see that as their biggest holding right here. But then a lot of your other stuff within the fund is going to have negative values. They're saying the NAV is 48.91 cents. Sometimes these aren't perfect. Again, 75,000 shares. Not sure how dead on that is. I always use everything by downloading 100% of what they have and just doing the math to figure things out. Salty closed at $49 a share, and they are looking at high IV stocks and options based off of everything that I looked up. Okay. They had just in Wednesday, Thursday, Friday, they had about 135 trades, and they're just getting started. They brought in $5.6 million trading on Wednesday, Thursday, and Friday, and they dropped in value by 138,000 just on Friday, basically, because they're shorting things. So when everything in the world goes up, it's a down day for a short fund. Okay, obviously they sold a lot more shorts, and that's where the money came from on Friday. They're not. No, they will. They will. Basically, everything's going to always be opposite. If you have a big trading day, it's going to go along with a loss in share value for the most part. And if you have a big increase in value, it's going to usually go with a trading loss because although that means things went in your way too much, and you got to buy to close out your sold options. All right, so that's all I've got for you. I got to get going. I'm surprised I'm not getting yelled at already. I guess I could have pointed out there are 14 stocks or underlyings within the fund, and there's an average of 7.14% in each one. Again, I'm not going through all this because we didn't make an IV estimate because we're not worried about it. We'll highlight Mongo is 134% IV. These are all real nice and close on the allocation. You just see a bunch of 6s and 7s. 115% on Abercrombie and Fitch. If you watched Retire on Dividends video the other day, he started singing that song, like girls that wear Abercrombie and Fitch. And then everybody in the crowd that's grew up in that time frame started playing along. Applied Digital 117%, Bill Holdings 130%. So they've got some big ones in here. So we will see. Time's going to tell on this fund. All right, thank you, everyone. Oof. I almost forgot. I'm glad I just thought of this. We got a shout out, a thank you. Let's see if I can find it real quick. At first, every notification was like nice and easy. Then all of a sudden, when I got a lot of subscribers and a lot of views, they stopped keeping these notifications up, and it makes it hard. I have it written down. I just like to show people's names on the screen, but I'm not sure if I'm going to be able to find it. Give it another couple of scrolls. There it is. Cool. Okay. ASMAIB, Asmabe. I don't know how to say it, but he did a $2 super thanks back on Thursday's ULTI video, but it was, I think it was like after I had recorded Fridays, or maybe I just messed up and forgot to say it. But I wanted to say a big thank you for that, ASMIB. Very much appreciate it. So got your shout out. Hope you made it to the end of the video to see it. All right. Wish us luck. We're off to go try to win this soccer tournament. We went 2-0 yesterday. I say we, it's my daughter. We're the number 1 seed going into today. We got to win the first game to make it to the championship. So, all right. Thank you, everybody, for watching. Likes, shares, comments, all that good stuff. Here's your dad joke of the day that you get as your reward for listening to me babble for 35 minutes. Why do melons have weddings? Because they can't elope. Made myself laugh. That doesn't always happen. All right. Have a great rest of your day, and I'll talk to you in tomorrow's video.